And now, for a deep dive into the state of digital asset investment and why the herd is still coming, please welcome Galaxy Digital CEO Mike Novogratz.
I got 4 pillows. Well, thank you. It's great to be here in Brooklyn, and thank you, Dustin, for this great space. You know, I had to fly the red eye in from Los Angeles today to be here, and I did it because Joe Lubin's out there. I love Joe Lubin, and quite frankly, I love this ConsenSys community, and so it's good to be here. I didn't have a lot of time to change, and I was running out the door. My wife said, "You know, you look like a good and plenty," and so you got that going for you. I was at the first Ethereal summit, and I remember, you know, showing up and speaking there, and it was smaller than this. It was a lot of people and crowded, and I looked around and I thought, I'm the oldest guy here other than Joe. And it was a lot of, you know, people that had built the Ethereum project. Developers, young entrepreneurs, coders, and a bunch of new investors. And I figured my mission was to give the wise, you know, grizzled, older view of what it was like to be an investor in this new space. And then I went to the second Ethereal. So I'm becoming a veteran of these Ethereals. And at that point, I talked a little bit about the symbiotic nature of these communities, and that more so than even in normal investing, you know, in the crypto and in the blockchain space, doing well helped you do good. Or maybe it was the opposite. And I'm going to hit on that today, because I think both those themes are very relevant for where we are today. So my broad structure, which is a little unstructured, is going to be to talk a little bit about, you know, how we got here. I can't believe it was only 2 years ago for the first Ethereal summit. I remember, you know, Ether was trading at 80, and I was telling everyone, you got to hold on and just handcuff yourself to the desk, because in bull markets, it's really easy to sell. And 3 days later, it was 130, and I was selling a little bit. You know, and so we had this spectacular ride. I want to talk a little bit about what that ride was for both Ethereum and for the entire crypto space, and why it came apart. And so, first of all, why was it such a spectacular ride? You know, bubbles, speculative manias, and by all means, we had a speculative mania in 2017, often happen around things that fundamentally can change the world, that can create imagination in people to think the world could be different. You know, what ConsenSys is doing, what this whole Ethereum project is doing, this idea of a decentralized future, it's a big idea. It's a big idea, and it caught people's imagination. This idea of a new digital store of value is a big idea, and it caught people's imagination. The FU, the middle finger to institutions, that we don't need to trust institutions, is a big idea, and it caught people's imagination. And so we have this spectacularly fun ride, if you were long, where that story spread really globally and on a retail basis. It was not an institutional thing. It was the little man's revolution, right? We're going to democratize finance. And all of these stories fed in like kindling on the fire to create this great flame. Well, all good things must come to an end, right? We got to December of 2017, Jan of 18, and prices were galloping, skyrocketing. But what was happening at the same time is anybody and their brother was launching a coin. And so we had this amazing supply response, right? You had tons of new blockchains being launched, tons of new projects on blockchains. And so all the coins started flooding the market. And so when a market has a lot of supply and runs out of demand, prices start falling. Now, regulators, our dear friends, the regulators, both here in the US and all around the world, regulators generally come from institutions. And since this was a retail-driven revolution, regulators weren't ready. And so they woke up in November, December, January of 17 and 18 and said, oh shit, we're way behind. And so some of them slammed the brakes, some of them tapped the brakes. Some of them just try to scare you. But it was enough to start the unwinding of that great crypto bubble. And let me tell you, 2018 was painful, right? Altcoins are, you know, some people have lesser name for them, down 98, 99%, some of them, right? The overall market was down 93%. Bitcoin was down 85%. Ether was down 90%. And so it was what you call a beatdown, a full-fledged beatdown. Well, guess what? I'm looking out here today, and there are more people here today than there were 2 years ago. There are better projects. The architecture of the space is a lot more advanced. The architecture of the entire space is a lot more advanced. The framework for institutions to participate has made huge strides. And so all bubbles aren't bad, right? Bubbles suck capital in, they suck energy in, they suck human capital in, most importantly. I was in San Francisco recently, and I visited 7 of the biggest crypto/venture funds. And I was shocked that almost every fund had some boy genius, some 22-year-old or 24-year-old or 19-year-old that had worked at the NSA, and was literally the top of his class, the top of his generation. You know, the best of the generation coming to this space. And so, in that respect, you know, the bubble you're supposed to erase. So as an investor, I think we're now sorting out a lot of the rubble, and we're coming up with a framework on how people are thinking about this. So I'm going to start with Bitcoin. I'm going to move across the spectrum. You know, crypto and blockchain encompasses a lot of things. There's store of value, there's payments. The really cool stuff is the Web 3.0. That's the real revolution in lots of ways. And originally we thought everyone was going to be everything. And that's not the way the market is seeing it right now, or certainly not the way I'm seeing it right now. And so I start with Bitcoin because it came first, and it is really establishing itself as a store of value. Now, what's interesting about it, it's kind of finished. It's not really, you don't need to do a lot more to it for it to fulfill its use case as a store of value. It's not the technology, right? We could take the Bitcoin code and re-release it tonight and call it NovoCoin, and it would be worth bupkis, right? It's the social construct that creates value. It is valuable because we say it's valuable, because people have determined it's valuable. I look back on gold, and gold's pretty interesting, right? The Incas and the Aztecs thought gold came from the gods, and hence it was bestowed with value. Gold only has value because we say it has value. There was something magic in it. And quite frankly, when we look back 20 years from now, people are going to think, how did that Bitcoin thing come about? There was some magic to it. It just did. You know, I was arguing, Joe and I were in Las Vegas arguing with Norbertini. I said, the debate is over. It won. It's got a $120 billion market cap. It is a store of value. And I'm going to tell you something else. I'm more bullish today on the overall space, but specifically Bitcoin, than I've ever been, because I see the on-ramps for institutions who now believe it's a store of value to be moving in. Those are custody solutions that are stronger than the old ones, are more trusted. I could name 5 or 6 of them. I know ConsenSys is working on their own. BitGo, the one out in California that impressed the heck out of me was called Anchor. Fidelity has got one, and they've got a long queue of people lined up. And so that means that the pension funds and the endowments and the real money guys, who are certainly more nervous than the normal retail investor, can move into the space. And we're seeing it. The Yale Endowment Fund got in last year, Harvard and Stanford, and so you're seeing the endowments first. The big pensions aren't in yet, but they're looking. Facebook has announced a big project, right? A blockchain and a payment coin, and you can read about it in the press, and we'll see when they actually come out with their own announcement, as opposed to leaks, what happens. And I think this is a seminally important happening for the whole industry. And I say it because of this. If one of the biggest companies in the world says, I'm going to do a crypto, they're saying, I believe in crypto. It's not an experiment. Even if their coin doesn't work in the long run and doesn't become one of the winners, the fact that Facebook's getting in is going to push the guy at the Texas Municipal Teachers Union to say, hey, I got to get in too. And so the herd I talked about that's coming, that's going to push prices up, it's here. And it's slowly walking right now, and it's going to pick up momentum over the next 6 to 8 months. This is not the same Bitcoin and Ethereum move that we saw in 2016, 17, led by this frenzy of a story. Bitcoin has its own story, and because of that, I think it's probably the safest bet. So let me go to the second bucket before I get to the fun stuff. The second bucket really, I think, is going to be this fight over payments. You know, and it's not going to be solved in the next 6 months to 2 years. You've got stable coins, you're going to have a Facebook coin, you're going to have a Telegram coin. Some people use Bitcoin and Ethereum for payments now. But the reality is, in the broad West, people are okay with their money. Not in Venezuela or Zimbabwe or countries with big restrictions, but in the broad global economy. And so the payment system is going to most likely start for the next few years with some stable-ish coin. I think this is phenomenally important, right? If I think about what happens in China, China has a centralized digital currency. It's not a cryptocurrency, but it's a digital currency, right? I don't have my phone. 95% of financial transactions in China happen on a phone. That number is about 4 or 5% in the US. Those transactions go through a government clearinghouse. All of them. Doesn't matter if they're done in Alibaba or WeChat or any of the other payment process. So they go through a government clearinghouse. And that government clearinghouse then gets plugged into big government, big brothers, machine-based learning, AI analysis. And so they know what you think and how you behave. They pair that with facial recognition everywhere and an analysis of your internet traffic, you know, your browser searches. And so they give you a social responsibility score now in China. Last year, 30 million Chinese were restricted from moving from province to province because of their social responsibility score. And so we have Brave New World, we have Aldous Huxley's nightmare and George Orwell's nightmare crashing on us faster than we could have imagined. 5 years ago, we all thought President Xi was a great guy, right? He was a reformer, he was hitting corruption, and all of a sudden, he's got the tools to be an autocrat, right? A complete and total autocrat. He's asked for multiple terms instead of just the 2. And so we're moving so fast into this new world. And in a centralized digital currency, it's very scary. Worse would be a centralized cryptocurrency. Because then if they decided they didn't like gays, they could just shut off the money for all the gays. And people look at me like I'm crazy, but we just had the Sultan of Brunei 4 weeks ago declare publicly that he wanted to stone all gay men in the town square. And so we're in this very scary world where the blockchain and a decentralized system of payments, I think, is essential for our life, liberty, and pursuit of happiness. And so I'm watching this stuff both as an investor, but also as just a human, as an American and as a patriot, thinking we need to succeed. And so to me, watching this payment gig is really important because I think it's the next big move. Now for this audience, and really for the fun of the revolution, for the real transformation of the way we function as an economy, it's what I call Web 3.0. It's this decentralized platform to process information. It's separating data from the processing and application of data. We call it Web 3.0. Ethereum and lots of competitors are all vying for this space. Now, there's good news and bad news as Ether investors. The good news is Ether is way ahead. When I look at this stuff, we think you have to have community. And what is a community? It's entrepreneurs, it's developers, programmers, coders, it's miners, and in the long run, it's consumers, it's users. And so you got to get them in the room. And Ethereum, by a long shot, has the most people in the room. There are lots of competitors coming, you know, from Definity and Algorand and Hashgraph that haven't even launched their protocols, from you know, the exchanges which are starting to launch their own blockchains. Cosmos, which is going to, you know, have its own interoperability in blockchain, and Polkadot, and so. But what we look at as investors, and what I stress, it only works if you get people in the room. I had a tweet a few weeks ago where I, badmouth Litecoin. I said, you should go long Bitcoin and short Litecoin. I'd like to know that trade's about 35% in my favor. Not to brag. And I got attacked by the Litecoin community. I mean, attacked, almost death threats, you don't understand. And it was a very vibrant community. The problem was, it's a community of speculators, of promoters, of pumpers. There's no one building anything on the Litecoin blockchain. And so, to me, no future, right? Because if you really think Bitcoin is going to win this store of value, everything else needs to be used for something. I always say this, there are 114 elements on the periodic table. Only one, gold, just gets store of value. Everything else is valuable because we use it. We use copper to build stuff, right? And so I really do believe that most of these cryptos are going to need to prove themselves out. In Web 3.0, this is a multi-year plan, right? We're making progress in scalability. We're making progress in user interface, but we're not there yet. We're not there even close. And so this is 2, 3, 4, 5 years out before this part of the revolution. And quite frankly, it's the fun part. Bitcoin itself is cool, but having a digital store of value is, all right, we have gold, now we have a digital gold. It's not going to change the world, right? Web 3.0 has the potential to change the world. And so, again, as an investor, and these aren't all or nothing. Ethereum wouldn't have its value already if there wasn't some idea that it could be money, right? I sometimes think that from a marketing perspective, being as honest as the Ether community was in saying, hey, it's crypto gas or crypto fuel, did it a little disservice. Because the utility side of blockchains is certainly going to give them value. But when I think about the cloud, for instance, versus gold, gold's got about an $8.5 trillion market cap, and the cloud has maybe an $800 billion market cap. And so it's 1/10 of gold, right? The real juice, and it's important to get the juice because that capital comes in that you can then spend on development, comes from being money or store of value. And so it's a two-step process, though. Ethereum is going to have to win, which means the most people in the room and actually get used. And then over time, it's that transformation, that magic, that it becomes money, it becomes payment. And so we're watching that really carefully. I do think this overall wave of money coming in is going to push up all the coins. I think Bitcoin dominance stays for a while because that's where the institutions are going to first start. But again, having just been to the West Coast, and one of the things that really pisses me off, because I'm a New Yorker, I love this city, and the hedge fund industry is a New York-based industry because Wall Street's here in New York. The hedge fund industry for crypto is going to be based in San Francisco, and that sucks because we're going to have to move a decent chunk of our people out to San Francisco, and it's just not nearly as good of a city. But I was out there. I was out there in San Francisco, and I visited 7 or 8 of the world-class firms. And I would tell you, and this is not to make Joe feel good, categorically, Ethereum was the favored project, the highest odds across the board of people that thought Web 3.0 could work. And so what worried me a little is that they all kind of bought my Bitcoin story and that Ether was going to take longer, but they all thought the smartest brains in the game were here, and it was just the head start. So we'll see. But so that's broadly how I'm seeing the world. Listen, there are other parts of the space. I mean, I could go on forever. I don't want to because I only have 3 minutes and 59 seconds left. And so I want to spend the last piece of the talk, and man, talks go fast, on what I talked about at the second Ethereum conference. The second Ethereal conference, and that is doing well by doing good. The industry needs to self-regulate. Regulators are coming, and they're going to come faster, or I should say slower and meaner, if the industry doesn't self-regulate. Up in Canada, this exchange called Quadringa got hacked, or some man ran off with $500 million, and that wasn't good because it took the Canadian and the US regulators and scared the heck out of them. Their job is to protect the little guy, and $500 million just got stolen or lost. And so we have seen really clearly that the SEC has nudged FINRA to slow everything down. That's not me making it up, that's fact. And all the people we talk to in the industry are telling us the same thing. We had Binance get hacked recently for $40 million. And while, they responded quickly and made their investors whole, it's not good for the space. It slows the process down. There's one exchange, I met with the CEO, and he was bragging to me that they had a 97% margin on a huge number. And I was like, well, that's the stupidest thing I've ever heard, sir. You should spend some of that money on security, on compliance, on infrastructure. And he's like, no, next year I go 99% margin. And we need to wash that out of the community because while regulators are open-minded and I think are actually more constructive than broadly people think for this revolution, you get a few more really stupid things and the game could change. You see, the whims of politics change easily and the whims of regulators could change easily. You have to remember, we are in a administration right now, which might not be here in 2 more years, which is very anti-regulation, right? I mean, the Trump administration is anti-regulation. And so this is as good as it's going to get in some ways. So I would just leave you with that it's everyone's job out here to self-police. The neat part of the space is if you do well, it helps the overall space. I used to think it was philanthropy. I had this friend, Alex Marcos. I was like, Alex, you're coding on Bitcoin. You're doing all this stuff. You're like a philanthropist. And he looked at me like I was crazy. He said, I own a bunch of Bitcoin. I'm doing it because I want the community to be better so the price goes up. And so I think that's an important thing to remember. I've got 4 seconds left. And so I just want to thank you guys. I take questions, but they told me I'm not allowed to. I have not been as constructive on the space for a long time. I really think this is going to be an important year as you start seeing institutions, as an investor, institutions come into the space. And I think it's up to the developers, entrepreneurs, and community to really build stuff that people use. And the faster that happens, the better for all of us. Thank you.